The month of April was absolutely insane for the stock market, and it's all because of tariffs. In one single day, my portfolio lost $13,000, and the next day, I lost another $13,000. Then, just 1 week later, Trump announced a 90-day pause on the tariffs, so the market shot up with another $13,000 swing in a single day. Since then, it's been a roller coaster, with Trump making more threats, flip-flopping, exemptions, and further escalating the trade war with China to unbelievable levels. And so my portfolio has been a yo-yo, up and down, something new every single day. So the question I want to answer today is, how do I invest during all of this turmoil? Hey guys, it's Adrian here, the Canadian in a t-shirt, and today I'll show you what Canadian stocks I'm buying in my TFSA account in April 2025, in the middle of Trump's tariff war. This video is a sequel. Make sure you watch part 1 for a 20-minute breakdown on Trump's tariffs, the logic behind it, the calculation they use to come up with these numbers, their fundamental misunderstanding between a trade deficit and a tariff, and my prediction on what will happen at the end of all of this. And just like my last video, I decided to make this video public and free for everybody. Check out my members only video to see a full breakdown of my portfolio and a long analysis of what stocks and ETFs I'm buying every single month. So this will give you a taste of what my members only videos look like, and especially times like this when the market is going crazy, a lot of you newer investors are probably freaking out, understandably so. So I hope that seeing my portfolio and hearing my thought process will help reassure you. I did want to get this video out weeks ago, but this month has been crazy for me. In fact, just last week, we flew to Vancouver to surprise my good friend Brandon Beavis on his 30th birthday. Check out his video on his Instagram channel. His reaction is amazing. So thank you for your patience, and let's jump in. Before I talk about what stocks I'm buying, I first want to give an overview of how my portfolio is doing as a whole this past month. The good, the bad, and the ugly. Then I want to focus on the importance of long-term investing. Staying the course, even when times are tough. And reiterating how important this discipline and self-control is, both for newer investors just getting started and more seasoned investors, especially the ones who are close to retirement and starting to withdraw funds. At the end, I'll share exactly what stocks I ended up buying in April and my strategy behind it. Here you can see my portfolio summary on Questrade. This is across all of my accounts. So that includes my TFSA, RRSP, FHSA, and my non-registered account. This was the edge of the cliff. The day before Trump announced the tariffs, my portfolio was worth a total of $438,000. Then Trump announces sweeping tariffs on basically every country in the world, and I lose $13,000 in a single day. The next day, another $13,000 gone. Then each day after that kept losing and losing. Then Trump issues a 90-day pause and the market spikes up. But I'm still well below where I started from. I'm still down more than $20,000 from where I was just a week ago. Since then, it's been a yo-yo, up and down, up and down. I've been investing for over a decade. I've lived through several legitimate market crashes. I've never seen behavior like this. I've never seen such drastic swings up and down on a day-to-day basis. If I were a new investor just starting out, I would be freaking out. And probably I'd be close to giving up. Seeing this kind of behavior just reinforces those misconceptions that investing is gambling. It's too risky. It's too speculative. You can't do it on your own. Leave it to the experts on Wall Street. But I'm not giving up. I'm not freaking out. Why? Because I've been investing for 10 years. Because I'm focused on the long term. I genuinely do not care what happens next week, next month, even next year. I care about my portfolio over the next 10 years, 20 years, 30 years. I've said this 100 times in my videos in the past, but I'll say it again. When in doubt, zoom out. In the short term, yes, things are bad and these drops are scary. But since I've been investing for the long term for many, many years, even though right now we're in a really bad spot, I'm still enormously profitable in the long term. Let's focus exclusively on my TFSA account. You can see those same massive drops and then the up, down, that volatility. And even though right now we're at a low point, because I've been investing for such a long time, I still have over $45,000 of profit. That's tax-free money I didn't have to work for. That represents a 70% rate of return. I'll get back to this very important point in the next chapter, but now let's look at my RRSP account, since it's a similar but also pretty different story. My RRSP is down significantly from before the tariffs were announced, and it's not even close to recovery, for two main reasons. One, I'm mainly focused on the US stock market, which is still recovering. But number two, the US dollar is really hurting. Before, when the US dollar was much stronger than the Canadian dollar, my US investments were inflated in value. Now, it's the opposite. Looking here in my RRSP account, the vast majority of this RRSP portfolio is in USD investments. So when the US dollar is tanking, my portfolio is hit extra hard. And that's why my RRSP portfolio is struggling significantly more than my TFSA. Don't get me wrong, I'm still profitable because I'm investing in the long term, but the recovery is going to be a lot slower than my Canadian-focused TFSA. Back at the start of the tariff war, I lost $30,000 in just 2 days. Very scary, but I'm not worried. Why? Because I'm focusing on the long term. And this is the most important thing for everyday investors: discipline and long-term mindset. Seeing a crash like this is scary, I get it, but I know for a fact it will recover, and history has taught us that lesson time and time again. Let's look at VOO, one of my favorite index funds that tracks the S&P 500. This is a good barometer for the US stock market as a whole. And that drop is very scary. But again, when in doubt, zoom out. The market always recovers. Let's zoom out even further. Do you guys remember COVID? It was terrifying times. The stock market was shut down. That's how bad the drops were in a single day. In the moment, it looked like the end of the world. But now, zooming out over the past 14 years, this 2020 crash is barely even a blip. You can barely see it. Let's zoom out even further. We have to look at an older ETF, SPY. We can see all of the massive market crashes over the past few decades. The 2022 crash, the 2020 COVID crash, the 2008 housing collapse, the early 2000s dot-com bubble burst. All of these events were massive end-of-the-world scenarios in the short term. But zooming out in the long term, it's just a little dip, and the market has always recovered. This is one of my favorite facts. There's never been a 20-year period where the US stock market lost money. Meaning if you invest in the long term, 20 years, you are historically guaranteed to earn a profit, even if you sell at the lowest point. I cannot overstate how important this is. Time is your biggest ally when it comes to investing. Not even close. I am not special. I am not a genius. I'm not outsmarting the market. I'm not doing anything fancy. I'm just patient and disciplined. That's how I'm able to build these long-term profits. And that is what's going to let me retire in my 40s. I have a whole playlist of videos on how to invest and how to keep your cool during a market crash. I know these lessons helped a lot of you guys during the 2020 and 2022 market crash. And I know they will help a lot of you guys today. So please give them a watch. I'm not freaking out because I do not need this money for the next 10 years. I have time on my side. But what if you do need the money? What if you're retiring soon? Or what if your child is about to go to university and you need to withdraw from your RRSP and now you're forced to sell at a loss? What do you do then? That is an awful situation, and your stress and worries are 100% justified. My advice would be only sell the absolute minimum amount that you need immediately. The rest, stay invested and give it as much time as possible to let them recover. And if you need more money, sell as you go. It might take months, it might take years to recover. We don't know what's going to happen. And this has only been 3 months into this administration. I definitely expect more uncertainty and turmoil up ahead. Now, what did I decide to invest in the middle of the tariff war? You can see the date was Thursday, April 3rd. This is the day that Trump made his sweeping tariffs announcement. And on that single day alone, my TFSA portfolio lost 2% in 1 day. You can see here I had about $1,500 ready as cash, so I was able to buy things at a discount and take advantage of these discounted prices. But here's the problem. As it was happening on that day, nothing was really screaming out at me as an amazing opportunity. We knew tariffs were coming, but the scale and the intent of these tariffs, no one saw coming. And it wasn't targeted selective tariffs, it was sweeping tariffs that hit allies and enemies alike, especially the countries that the US had a large trade deficit with. In the moment, things were so unpredictable, and in the short term, which way would it go? I could honestly see it going in any direction. This was very different from past market crashes, where there were clear winners and losers in response to an external force of nature. It was much easier to find those opportunities back then. Just look at the COVID crash a few years ago. The clear winners were the tech sector, pharmaceuticals, consumer staples. Those were companies I invested in right away, and I saw almost immediate profits due to the nature of COVID and lockdowns. At that time, there were also some clear losers, like airlines, the tourism industry, in terms of real estate, office real estate, and retail real estate, both of which were shut down. It was still a risk because you never knew if these companies would survive and how long COVID would last, but I decided to take a risk and double down on some of these impacted sectors. As an example, let's look at Chartwell Retirement REIT. This is a real estate company that owns and operates retirement homes across Canada. As you can imagine, during the COVID years, retirement homes were absolutely devastated. They were hit harder than pretty much any other industry, and so the stock tanked. But I knew that COVID wasn't going to last forever, and looking at the demographics and Canada's aging population, the demand for retirement homes for seniors is only going to grow over the years. I made this prediction 5 years ago in this video right here. So I doubled down and invested heavily in this company at the low point here in 2020. It didn't recover right away, but I knew this was an opportunity. And over the years, it did recover and has since grown, earning me great profits, all at the same time paying me fantastic dividends every single month along the way. Looking at it today, I've earned thousands of dollars in capital gains on this stock alone, and over $1,000 over the years in dividend income. So this is just one example of a clear opportunity during a market crash. But in this moment, at the start of the tariff war, I didn't see those opportunities because it wasn't clear what the long-term intent or strategy is. Are tariffs meant to be used as a short-term threat to renegotiate trade deals, or are they intended to be a long-term policy to hurt consumers in the short term, but in the long term, stimulate the US economy, bring back American jobs, and reinforce US manufacturing? That important distinction was not clear back then, and it's still not clear today. I didn't have enough confidence to predict the short term or even the long term future around these tariffs, so I didn't feel comfortable doubling down on one particular stock or even one particular industry. Instead, I cast a wider net and invested in a broad market index ETF to take advantage of those discounted prices across the entire market. That's what I did. I bought one of my all-time favorite ETFs, XIC. I've talked about XIC many times on this channel. Watch this video right here for an in-depth breakdown of it. This ETF just contains 221 of the largest Canadian companies. Household names you know well, like the big six banks, TD, Royal Bank, BMO, etc. Plus other big Canadian companies like Enbridge, Shopify, the railway companies, the telecoms. These are all staples of the Canadian economy, and yes, they will each be affected by tariffs different ways, but I don't feel comfortable enough doubling down on one of those individual stocks, so I'd rather invest in 220 of them at the same time with this ETF. That's the power of diversification. I cover all of my bases, and it gives me peace of mind. XIC is one of my oldest investments, and I buy this ETF rain or shine, no matter what is going on in the world economy or in the markets as a whole. And back then, on tariff day, XIC dropped by 4% in that single day. That's a great deal, so I definitely took advantage of it. So I spent all of my available cash, about $1,500, and I was able to buy 40 shares of XIC. My last step was just to update my Excel dividend tracker spreadsheet. As always, I include a link down below. You can download this template totally for free and use it for yourself. So I now had 159 shares of XIC, updating the book value, and there you go. And that makes XIC my largest ETF in my TFSA portfolio. Can't go wrong with that. I hope you guys found this video helpful and that seeing my thought process and my portfolio helped reassure you during these troubling times. If you want to see more videos like this every single month, consider joining my members only videos. It's $5 a month, about $1 a week, and it really does help support my channel. But if you don't have any money to spend, keep it and invest it for yourself. Continue to watch my regular videos for free, give them a thumbs up, and share my videos with a friend. I really appreciate it. So thanks for watching, stay safe out there, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.